All right, I want to bring in Wells Fargo Advisors Senior VP Mark C. Smith, along with Kingsview Wealth Management CIO Scott Martin. Mark, let me start with you. I know that you're mostly conservative. I think you've been largely in value. How do you see the rest of this year playing out? Because that's been a sort of a tug-of-war kind of thing, particularly with all the different inputs in this economy.
I think the rest of the year is going to do as well as the last 6 months. If you're looking at value specifically, let's see what happened in the sectors, right? Financials are doing 20% plus since January. You've got energy. Last time I was on with you, Charles, I recommended energy. It's up 35% since January as a sector. And then you've got communications up 15%. Real estate's in the value space is up 25% since January. So are any of those sectors going to go down? Yeah, if we go back into lockdown. But the last time I checked, when I went outside, everyone's out enjoying the summer. They're taking advantage of being out. So those that are vaccinated are taking advantage, and I think that's going to continue. You've got Merck that just said they've got a new pill that might be released in October that would be a great treatment for it as well. So there are a lot of great news. And so I think the reopening play is going to be great. And I think a lot of the value sector are going to do very well in that environment and continue. I don't know so much for growth because, you know, we've had all-time highs in all these growth stocks. And if we go back to being back outside, I think growth takes a little bit of a hit because we've been hanging out in these tech stocks the last year and a half, staying at home.
Yeah. And we see a little bit of that with Amazon today. Scott, you started the year conservative. You went into growth. Now, I will say July, as of yesterday, growth was up 5% versus less than 1% for value. It does go back and forth. Where are you right now? Because you did start off a lot more conservative. You got more aggressive. You were right. Are you staying the course?
Yeah, we are. But realizing, Charles, there's going to be a lot of push and pull here into the end of the year. I mean, a lot of the easy money, I think, has been made. Now, you're right. A super spending, impetus by the government, also by the Fed as well, as far as stimulus they're providing. And still this Delta variant that's out there that's kind of screwing with psyche, let's say, does allow, I think, things to stay relatively stable or relatively, let's say, supportive from the Fed and the government standpoint. So that's going to keep the market floor there. But the reality is this. A lot of what we've seen happen in the market with this rebound in growth, the great numbers that we saw in earnings this week was already factored in. And so what's this next impetus that's going to push us over the edge, either one way or the other way? And I think it's probably going to be this back and forth where you've got to buy things that are down. We talk about this a lot, Charles. Stuff like Upwork today. We picked up for our clients this morning. It's already rallied about 5% off the bottom. Amazon, as you mentioned, Square's down 3% today. Stocks you like over the long term, stocks that will benefit from either a lockdown area or lockdown situation or a non-lockdown situation. When those things pull back, you got to buy them. Apple earnings too, say after Tuesday this week. Great buying opportunity. It's up since then. That's what you got to look for as an investor.
I want to get from both of you guys. The SEC this morning, they put a hold on all these IPOs coming out of China. We see where the KWEB, which is the Chinese internet stocks, have been crushed. Our names, conversely, have done well. Is that a place, Mark, that you would be looking to buy weakness? Obviously, if I don't know what's going on with President Xi over there and what they might do to reverse some of these actions, but if they do reverse them, you might think some of these names would pop.
Listen, I'm telling my clients if they're going to be in China, they've got to be with the companies that have really changed the paradigm. You've got companies that are as big as Amazon and as big as Uber, the Chinese versions over there. And I don't think anyone's going to start hailing cabs on the side of the street in Shanghai. I think they're going to continue to use these apps. So you're saying like a DD? So you're saying like a DD or the Alibabas and the Baidus of the world? Yeah, absolutely. These things are
but by the weakness.
Absolutely, they're transformational companies. I don't think we're going to go back to picking up packages from the front door stores if they can get delivered. So I think these companies, even though they're having a pullback, I'm telling my clients a dollar cost average in some of these names because they really aren't going away, no matter what she's doing over there.
Hey, Scott, let me get your thoughts on buying the Russell. The Russell 2000, it's been a juggernaut, but more recently, let's call it the last 4 or 5 weeks, it's been weak. It's the best performing big equity index today. I think it's oversold. I think it also benefits from a weaker dollar. Are you a buyer there?
Not yet, Charles. You know, definitely it's oversold versus its large cap brethren. But, you know, the Russell hasn't performed very well versus the large cap stocks as the breadth has thinned out. And that's been kind of disappointing because in times when the market had thinned out in previous years, the Russell had stepped up. So for us to get back into small cap here, which we have since sold, I'd like to see that firm up a bit, Charles, which it probably will into the end of the year because I think there's some buyers in there. But at least for now, it still seems like there's a lot of weak hands hanging out.
All right, Mark, Scott, thank you both very much. Great information, and we'll be watching and trying to make some money from it. Meanwhile, folks, the pressure is on.